one.
The moment we've all been waiting for, the July CPI. Hot or not? We'll find out. We'll be chatting with Mish Schneider and Market Gauge on that one. We got a ton of earnings to cover, and we got a trading story. You win some, you lose some, and some you should have just held on a little bit longer. Pre-market prep on a Thursday.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
Good morning, traders and investors. Let's get to the price action. S&P's up 20 and a quarter handles, 45.06 after the week close. The buck pulling back down 34 cents, under 102 at 101.97. Bonds up a quarter of a point at 123. Crude taking a breather down 63 cents at 83.78. Gold in the green by 440 at 19.55. Even silver trying to get back in the 23 handle, up 13 cents at 22.86. And Bitcoin, it's back under 30K. It's up $75 at 29,585. We always have some good things to start to show. So I want to bring in Triple D here. And here we go. We got another story from Triple D.
I wanted to talk about this yesterday, like trading slumps, like trading through it. And so I'll give you just a story from last night. And sometimes you just like you're making good calls, you're feeling the market, but it's just not working out for you. And I mean, you can be the casino. We know the casino's edge, and this is how I've always treated trading. Like, you're the casino and you're playing your edge. And you are the actual casino. The casino's got the edge, in the slot machines of 3-4%, or the craps table of a few percent. But they go on bad runs where players just get lucky. They're lose some money. Like casinos on any given day can lose money on any given roll of the dice. They can lose money. You don't always win. So as long as you're sticking to your systems and the proven systems, you're going to go into bad runs. I'm on one of those bad runs right now. August has been terrible for me, despite really feeling the market well. Like I'm calling it well, I'm trading it well. It's just like I'm getting hit. It's like every day I'm like got a random stock and it gets downgraded, or I'm just getting like dinged on dumb things, and I'm just missing the good stuff. And case in point is like feeling it last night. So Capri is getting taken over, which we'll talk about that in a second, but I just want to use this as a teaching. I went long this into the close. The reason I went long Capri into the close was this chart is in the gutter, and I'm like, expectations are so low that they in all likelihood are going to be able to beat the bar. So I'm like, I don't mind maybe, just maybe, taking Capri into the report. So I had it for the most of the part last night. And then after hours, it started getting bid up a little bit, just late in the session. I'm like, you know what? I'm just going to take the bird in the hand, instead of taking it through the report. And so I sell it literally last night before the after hours close. And then I wake up this morning and it's taken over. And I'm like, I cannot believe I was that close to picking up 20 points on that Capri. It'd make my week, something like that, a 20-point move. I'm jumping in stocks for 20, 30 cents, sometimes less. 20 points is a huge winner. But it's just like, this is the month. It's like, you're so close. You're doing it all right, but it's just not working out for you. And sometimes that's going to happen. You know what you got to do? You got to keep your head up, and you got to keep grinding, and you got to say, like it's going to, work out. Like things are going to turn around. And as long as those systems, 23 years of trading these systems is proven, it's going to work out. But it's just, we're all going to have slumps, and we have slumps, and I have them, and, they don't usually last, This has probably been like a 7 to 8 day slump here. They don't usually last this long. It's usually a few days. So it's a pretty good slump for me, despite, and if I was calling the market bad, like if I was feeling the market, I'd be like, like this is, something's wrong here, but I'm still making good calls. It's just like, it's just not working out. So I'm just trying to trade through it And I'm just saying, even, the people, who have been trading for years, we all get trading slumps. Just sometimes it doesn't work out.
Yeah, Dennis, you spend a lot of time in front of the screen,
Right.
and it just, I think that like decisions, I mean, you're looking at everything. You're looking at ticks. You're looking at news. I think so. And one thing, I've tried to, talk to you from time to time is, you've got a lot of things going on and you're busy. It's just sometimes you just like a half a day, away from the market. You may miss an opportunity or something, but just kind of just like clearing your head, and getting away.
Yeah.
But but it's
And I
but you
did
like to
that.
trade to it.
So
You
I
like
did that
all right,
already,
good.
actually. It's probably why my month isn't that great either. I actually took a day off, one night off which I haven't done in a long time, a few days ago. I was like, I spent it with the family. I was like, it's been like, and it's a struggle too. I mean, these hours that I work are a little bit messed up, and I've talked to you about this, Joel, too. I work the pre-market. I work the open. I don't trade in the middle of the day. People always find that mind-boggling that I don't trade like 11 to 2:30 or 3 o'clock, those middle 4 hours, because it's too efficient. I trade in efficiencies, and the market is so bloody efficient in the middle of the day, I can't find the edge. Now, exceptions is if there's like a Fed announcement or something, I may trade those hours, but I've found, middle of the day is just too choppy, and I find the best moves have been overnight. So I basically
Oh, that's been seeing that for years.
about 10 years ago, I switched from intraday to like overnight, like getting feels. And my strategies, if you listen to the show, like holding stocks before they report, trading, I trade on the news, sympathy trades, all kinds of stuff we've talked about before. And obviously just specializing like 2-day moves, different things, overnight moves. I became an overnight trader, trying to feel, I've got a feel for this, and I think this is what's going to happen tomorrow morning. It's just right now I've got the pretty good feel. The market's kind of doing what I want it to do, but it hasn't been easy, even being on
Timing.
the side. We've had a lot of chop in here. Like
Yeah.
the market seems to be up every single morning, and then it gives it back during the day. So, I've got an overall bearish thesis, but we've been popping every morning. And then it's actually the move down has been probably when I haven't been at my desk in the middle of the day. So it's funny how it just doesn't work out sometimes. But as long as you're still grinding, making the calls, I'm just saying to, even the traders who are still learning. I mean, sometimes you just got to grind it out, and eventually you'll find that edge. But, even, the best traders, not that I'm one of the best, but I know there's some of the best out there, they go into slumps, unless you're Kenny Griffin with Citadel,
Yeah,
he
you never did.
doesn't have slumps, but he's the only one.
Unless you're on Twitter. Let's go here.
Well, nobody loses on Twitter either.
Let's go to you want.
It's not called Twitter anymore. It's called X.
Oh, excuse me. We spent a lot of time on the Capri here.
Well, we haven't talked about it though, so
yeah.
might as well
I
mention
got you
the
guys.
news.
Let me bring it in here. Tapestry, of course, announced definitive agreement to acquire Capri Holding Limited for $57 a share in cash. So rock out your Jimmy Choo shoes, your Michael Kors bags, and your Versace, because looks like it's gotten a nice lift here.
Congrats to Steve Grasso too, who's been all over this. I mean, it has not been good for him with the stock leaking, but boom, just in like one day, he's probably going to get most of those losses back here. I mean, unbelievable. Nobody, like you said, Joel, nobody saw this one coming. The stock's at near the 52-week low. So they kept this one quiet, because sometimes you see these run-ups and then the report happens and you're like, who knew something? In this case, that the stock shows that pretty much nobody knew anything.
I think Sean Emery has talked about this one as well in the past. I don't know if he's still in it. I sure hope he is. You got the 57 Tapestry is taking a little bit of a hit on this, which usually happens with the acquirer, right? Down $2 here. Man, not see, well, 39 looks like an interesting level to me. Two lows in that area. It's traded below 39. Let's see what happens. Below 39, you're working your way closer to 37. But that's a swing area for TPR, and it's a shocker. I looked at it and I'm like, look at that thing. Absolutely, no one knew about that one. I think
it was right on the lows. And the only reason I wanted to be long is because this theme that we've seen, I tweeted this. It's like the SMCI, the bar was so high, there's no way getting over that. Disney, the bar was so low, which we'll get to. We talk Disney here right now, Mitch, maybe before we get Mish. But the bar was so low that if they said anything even remotely okay, it was going to go up. And Capri, I felt like, was in the same boat. Now, obviously, this has nothing to do with the earnings, but I feel like even if they reported, and I didn't even see what the report was, I feel like the stock wouldn't have got killed for the simple reason is that the expectations were just already in the gutter. So did they even report the earnings? They were supposed to report.
And I was looking for sympathy plays. There's no other retail moving off this. This is totally out of the blue. I don't know if this, I'm like,
it's also
Macy's,
luxury
Kohl's.
goods,
There's
right?
a couple retailers up, but yeah, nothing's flying.
Yep. All right, you want to go to the House of Mouse?
Sure.
Let's go to it. Let's get to Walt Disney here. Q3 EPS at $1.03 beats the 97-cent estimate. Sales of $22.33 billion missed the $22.48 billion estimate. Disney's Q3 23 parks experience and product revenue was at $8.3 billion. Segment operating income at $2.4. Disney Plus Q3 domestic paid subscribers at 46 million, down 1% quarter over quarter. ESPN Plus subscribers flat here. Disney to raise on ad-free Disney, now going towards $13.99 per month starting in October's 12th. Also was stated that the cruise ships are at least doing well, so maybe that helps the cruise lines today. Iger said that cruise ships are at 98% occupancy for Q4. I mean, I don't know where you guys heard the cruise news from, but Disney, of course, will be also exploring partnerships for ESPN, but will retain control. Disney also said that it will crack down on password sharing following Netflix lead. Now, is this the time for Disney to come back? I'm gonna go on. I'm gonna say I don't think this is it. This is a bad report for me.
The report wasn't good, and he talked about even traffic. I believe he talked in travelers like at the parks and stuff, showing a little bit of which we had been concerned about, showing a slight not decline,
softening in Central Florida tourism.
Yeah.
That's what
I think softening was
used.
softening tourism. That doesn't sound good either. There's nothing good in this report. The simple fact was it was just expectations in the gutter. And the reason it popped was they said the cost cutting measures were going well. They were above. They thought they were going to be able to cut costs even more. So literally bots bought the hell out of this stock not because the company's doing well, because they're cutting costs. I mean, you cut costs when your business is not doing well. That's when you're focusing on that. So I absolutely just think this was a terrible report. It popped.
It went to where it should have, though. And I talked about this on the closing print. I mean, look at that 85 and a half area. I don't know, Dennis, if it caught your eye at all, but I mean, you got a half a dozen lows around the 85 to 85 and a half area. The overshoot took it to 84.63. I don't know what someone's doing buying this at 93, 92.80 afterwards.
The bots are nuts.
That's crazy. That is absolutely crazy. That's an 8-point move off it, but I'm still just going to keep it simple on this one. I don't know what's going to happen today, tomorrow, the next thing. 85 is great support, so I don't have a problem if you're trying a longer term trade because it could turn out really well. But when will this hold a 90 bid? Not just resistance, not just popping over and closing. Like the buyers, the 85 buyers, are they going to step up to 90? Or are they waiting to buy more at 80? And I don't think this is enough of a good enough report to say, okay, we got to own this. We got to start our massive position over 90. So I think patient buyers underneath. And for today's session, 90, 71, 81. That's still $2 away. That splits a pair of highs from July 13th and 14th.
There was also a comment on the dividend. Do you have that, Mitch? Because I do believe that the dividend.
I don't have the dividend comment. I don't have the
no. There's no imminent date,
here.
But I believe it was mentioned that they were pushing for the end of this year to reinstate the dividend. That was always the goal. I think it was said. I didn't listen to the call, so I'm just looking through the highlights. But people are saying that it was said. I can't confirm that or not. But they're also saying that might be the reason that the stock was really popping too.
I think the stock, at least from what everyone was writing about, was popping based off of the crackdown on password sharing and the mentions of getting more money from their ad-free Disney Plus.
They're raising the price.
I don't think it was the dividend outlook, but that's just what I would think from based off the headlines.
Price to the $13.95 a month. And I don't know what I'm paying right now. It's
$13.99, and that's the ad-free.
I'm going to cancel. So inside scoop here from me. I'm going to cancel my subscription to Disney Plus. It's that bad. The Disney Plus is not worth $13.99. Netflix totally worth it. Way more content. There's not enough content there. The content on there is good, but like I said, they don't get new stuff. I already considered canceling it. Disney Plus is an epic disaster. They could not be doing worse on this. You know, it has no new content. Now you're jacking up the price. I don't like anything about that. So they popped it on. If they're popping up that news, I think it's very ignorant, because I think you're going to see people cancel the subscription. It's not like, oh, Netflix, I need this. No, you don't need the Disney Plus. There's not that much to watch on there. The stuff that's on there is pretty good, but there's not enough content. Listen to the show, Iger. Listen to our show. You're doing it all wrong. You cut back on, putting content on there, not focusing on it.
Why would you cut back
you went
on
at
content?
Netflix, go all in, man. Don't sit around here and, now we're cutting costs. Now we better not. Now you get 2 new shows on there a week. There's nothing to watch. Disney Plus is absolute junk.
I think the biggest thing is focus on different strategy. Apple TV, I think, is doing it right and getting the right actors and actresses behind their originals that give them the lift. If you go and you see the Apple TV originals, you have some big time actors. That is definitely going to help you out. We can't be focusing so much on kind of just trying to just get money from your subscribers and not bringing content. If you're not the best of breed in content, you ain't going to survive in this space. Another thing that I think Disney is doing completely wrong here is, let's just be honest, spin off ESPN. Stop exploring partnerships for ESPN. Another thing that they said, they're trying to retain control. And I don't think Disney is ever going to get back to that $200 spot. I mean, it's been cut down here in half. You're back towards 2014 prices. I think Disney is just kind of become a little bit of a value
I think we spent way
here.
too much time on Disney.
Well, one more thing here, just to clarify, and then we're going to go to Mish. But our own Nick Brown here, who's excellent at finding us stuff and digging. He might be the best digger, just coming from him right now. From the CFO on the call, and we're quoting, and to that point, as we mentioned before, we still expect to be in a position to recommend that the board declared a modest dividend by the end of this calendar year, with the intention to recommend increased shareholder returns over time as our earnings and free cash flow power grows. So that's what they said about the dividend. So they're still going to try to give a modest dividend, but they got problems here, man. I just think there's better places for your money. I know it's in the gutter and the valuation. Valuation ain't even cheap because the earnings come down.
No, it's expensive. Yeah, exactly.
Well, the earnings have come down so much. If they get back to where they were, it'll look relatively.
They need something else. I mean, they tried that pen thing. They tried the pen thing, the gaming thing. There's just there's got to be something else. Another something else, another catch. Something else to another catalyst for the stock. But let's bring on Mish. All right. Good morning. Good morning. We're Michele Schneider from Marketgauge, always giving us great information on the markets. And we're not going to ask you about Disney World, okay? So the market's at a really interesting point here, coming up with the CPI number. We've had some declines, but still the buy the dippers are out there. You just can't kill this market mentality, Mish. What's your take on really the been down in the S&P 6 out of the last 7 sessions?
Well, the big down, but really, if you think about it, about a 5 or 6% correction is really kind of normal in any market, certainly in a bull market. And as much as I hate to label the market bull or bear, I kind of like to think about it from the first 6 months to what's going to happen in the next 6 months. And I don't know if we necessarily have all that information yet. So right now, the market is still living on the fact that it's absorbed every single bad news, right, that can be thrown at it. And people still want to be invested in the market. The retail space is heavily invested. And then you have your perma bears out there who keep scratching their heads going, this can't be, nothing makes sense. So this has been a year where price proves out to be the most and only important thing. And all of the analysis and what if and if this, then that, you could throw that out the window. I mean, that's really, I think, the bottom line. Of course, I have my own analysis, but I'm not really going to make a move unless I see things set up well. And that's kind of how it goes. So first 6 months, right? Growth, tech, all of that was the big thing. And the next 6 months, my prediction, already we see oil and gas going up. And I think we may have talked about that last time. I had already gotten into oil. We've gotten into gas. So that energy space is big. I think other commodities could start booming a little bit more as people got too complacent on inflation. And I think that growth will mute more, not necessarily crash. And we may see more value type plays coming in as people start to switch from, hey, we just want to spend money all the time, to maybe we should just spend money more on what we need.
From the I mean, I don't really see how you could be a perma bear, because there's so many sectors that are doing well. You know, the housing sector, the industrials, Caterpillar, I think was up 6-7 points yesterday. So there's always this rotation going on. Well, yeah, maybe we're coming out of this, but we're going into this. So I mean, it's just not a sell everything market. But is there any sectors like Dennis, tried a trade on Capri last night ahead of the earnings? I don't know if you hold that, but like, is there anything waiting to go that really hasn't, that you're keeping an eye on?
Well, I do believe that there are still some industrial type materials that are lagging behind all the money that's being spent by the government to support manufacturing in the United States. What I've been sort of affectionately calling the things that make the things that make the things. So that's really where we've been looking at, which includes some base materials like metals, like steel, which has gone down a little bit because of China. But nonetheless, people need steel, they need copper. I think some companies like Dow Chemical and International Paper, all these companies, we actually are long a few of them. Chemours, these are the things that actually make the nuts and the bolts that will go into all of this manufacturing. I mean, this CHIPS Act, obviously, Chemours is a kind of an important little company that nobody really knows about, because it makes the coating that goes on every chip. And they
really,
and they have it's like a Teflon coating, but it's not Teflon.
What's the symbol on that, Mish?
CC. And if you take a look at it, I mean, it's not a bad looking chart, but it's certainly, compared to something like NVIDIA, that obviously if all chips use them, and I did some research on that, why isn't that company at $60? You have to wonder. It's trading at like 34, 35, 36, I think maybe coming in today around 37. And so that's really where we're starting to put some money to work in terms of the discretionary. In terms of the actual quant models, I mean, they got into oil, but they're late behind me as a discretionary trader, but they're still in NVIDIA and Meta and semiconductors. You know, a lot of the holdings that we had, a couple of things got a little bit more chopped up in this churn. But yeah, I mean, at this point, it seems like if you really want to think about where the areas of growth are for the next 6 months, particularly as we're going to go into an election year, and this economy has to grow in order to get Biden back into office, which clearly is what people are in his administration are going to push for. What's his big thing? Inflation reduction. Well, we still have high inflation, but he's going to want to put all that money to work that he can in manufacturing, industrial, so that we, in this anti-globalist world that we've been evolving into, become more self-sufficient and less dependent on China, which of course is why they're now forbidding tech investments in China. So yeah, that's kind of what we're looking at right now. And I still like gold. I still do. I think it's sold off, but hasn't been killed or anything. And eventually people will realize that it is a safety play and a place to go. But certain things have to happen first, and they haven't happened yet.
Let's, Mish, what are your thoughts here on this recent pullback in the market? So obviously, you know, you were talking about this move to value, which oil stocks had a pretty good week or two. But this pullback in some of the, you know, major tech components like Microsoft is down 40 points in 3 weeks. We've got Apple trading down about 15 points in the last 6 trading sessions. Do you think like the money's just going to fly back into this, or is this something, this rotation going to last, and we're going to start, continuing just to see maybe the mega cap tech take a back seat to value in the second half, or does the money just flow back into these stocks?
Both, if that's an answer. Yeah, well, you can have both. It's just that the velocity of how much money comes back and how much they actually go up from support levels, I think, will be key. So for example, let's take Microsoft. So, if you're looking at Microsoft at around 300, right? Let's see. No, it's
3.25.
3.25, right. To me, if you were first getting into Microsoft at 350, 360, 370, I mean, you had to realize that things were a little bloated at that point, and the rotation was happening. This is why the retail investors are doing so much better than the big hedge funds, because they're watching for this rotation. But if Microsoft gets down to 300, it could sit there and it could trade between 3 and 3.25, or even 3 and 350, and hang out there, while other things, as you mentioned, Dennis, rotate and continue to go up based on whatever the headlines are and what the needs are. So right now we're seeing energy, and there's some real reasons for the energy markets to go up. And natural gas, which I mentioned in the very beginning, right now, last year, Europe got a pass. They had a very mild winter. And now we can see that that may not necessarily be the case because of the whole Nino weather patterns. But besides that, I also read Chai Girl put something out this morning about Germany and low supply. So we still have supply chain. So to me, these big growth stocks, they're not going to crash, but they may not necessarily be the fun that they were from January to July. And by the way, that's evidenced by the 6-month calendar range that we like to use, that resets in January and resets in July. In January, Qs, SPYs, all these stocks, they blew out of their 6-month calendar range high. And that's why, one of the reasons why we had this huge rally up. Now, here we are in July, they're under their 6-month calendar range high. They have not broken their 6-month calendar range low. If they do, I probably would get a little bit more negative in the growth. But what has bursted out is a lot of these commodities, and definitely most things in the energy space, including natural gas. So that's how I'm looking at the growth area. I mean, AI, is it going to go away? No. But did it get too much fun at the party? Yeah. They're having a bit of a hangover? Yeah. Does that mean count them out? No. But that may not necessarily be the big place to put money for the next 6 months.
I'll keep calling it. I'm waiting for them to show me the money, I've been saying. But one thing that I'm definitely looking at, and you just pointed to some of the areas, especially in energy, I'm starting to see coal uptick here. And that's definitely a good one to catch. Stocks like AMR, BTU.
Okay, Mitch, we got CPI here coming in 30 seconds.
Oh my God.
Too quickly
Oh, wait,
here.
I'll have a sip of coffee.
Yeah,
right, so
yeah. You get to sit through this one, Ed. I think we did this with Blue. We're just going to the 1-minute chart here, and pre-market highs 45.16. Pre-market low 92.75, trading up near the highs of the pre-market session. If they really like this number, maybe get to the 45.40 area. There's 3 highs in that area. If they don't like the report, I'm looking for the parallels at the 44.80 area, or we could just chop around and see.
All right, remember expectations.
There we go.
Expectations year over year, 3.3, month over month, 0.2. Let's see what happens when we get this number. What did the chat say? I had asked them. Let's see what the bets
They
were.
like it.
The
They
bets
like
were
it.
hot. The bets were hot, at least from the chat. We'll see what happens there.
Let's see. What are we? I'm looking on my
All right,
X.
here we are. We're getting core CPI month over month at 0.2 versus 0.2 estimate right on the dot there, year over year at 3.2 versus 3.3, actually coming in light. So you guys in the chat, you were wrong. It happens, man. It happens to us all. We all get it wrong sometimes. U.S. initial jobless claims, 248,000 versus 230,000 estimate. So jobless claims getting a little bit of a spike there. Core CPI also coming in light at 4.7 versus 4.8. We're definitely going to be taking a look inside the CPI report. I will look into the report right now to see what's standing out to us. Is it services, energy? Of course, everyone was looking for oil to create a spike here on the CPI report. So let's see what we look inside.
We're getting a spike. Really no reaction down in the market. The pre-market traders bidding it up since that open last night. Pre-market high really in no man's land here at 45 and a quarter. That's your pre-market high. I think with just going with the recent price action, I think this is a big day for the bulls here because you came down under 4,500. You put a pair of lows in at the same area, and you're trying to rebound. Now, as Dennis mentioned earlier, we've had these pops, but we've given them back. So is this enough to turn the tide to turn some of the sellers on straight? That'd be a little bit more aggressive buyers. Well, we've had some aggressive buying. We've had some nice bounces off the lows. So, Mish, really looking at the information here, is this enough just to get the rah buy everything mentality back into the market?
Well, I don't know about buy everything. And again, let's go back to that July range because it's so important. And believe it or not, the closest index to breaking out of it right now, besides the Dow, is the Russell 2000. And we're just about $1 shy of that right now. So looking at IWM, Qs and SPYs are pretty far from those highs. So Qs would have to go back through 384 and SPYs would have to go back through like 460. So IWM is right there. This is exactly why I believe that the CPI numbers, we didn't expect them to be that hot this month because this huge, big run that we've had in the oil really has happened over the course of the last 6 weeks, but it may not be reflected in the CPI until next month. So I think that could be the hotter month. So I'm not surprised at this, but I would say this would be a good opportunity maybe to see another run for those highs, but they may or may not clear while the Russells might. And that completely is why I'm thinking that this could be the next 6 months of things over, paper over things, number one. And we saw that certainly with Apple. And number two is that I think that some of this other stuff is kind of tired and had its run, where there's a lot of opportunity in terms of the infrastructure, because that's what the government's going to push. And let's not get too complacent with inflation, even food inflation, because there's still a war. As far as I know, there's still a war. And interestingly, all of a sudden, these silos around the world, have you read that story, have been blowing up? There was Turkey, and then there was another country, I forget which one, and then today, France. So is that some kind of weird food terrorism? I mean, there's stuff still under the radar that tells me I still think inflation is going to come back. Maybe not to the point that we saw in June 2022, maybe even worse. We don't know. So, yeah, I'd say enjoy this rally right now, but don't look necessarily for new highs.
There's a fade. There's a fade going on right now as we speak. We are 15 handles off the highs. So it just feels like there's just like the overhead supply is just a little bit bigger than the underneath demand. But as I said, I think it's, you have the technicals. You don't have very often. You have two highs, basically three highs in the same area in the S&P, and then basically two lows at the 4480 area, and it's been nothing but chop in that area over the last couple of days. I think
it's August, but it's also August. I mean, that's the other thing is this is the first August I've actually ever been here. I've always gone away in August, and I've always been happy that I've done that. And this year, we're not doing that for other reasons, have nothing to do with the market. Our vacation will be later on in the year, but still, it's August, and so people are gone. And I think you have to make sure that you understand that the volatility is going to be low, the volume is going to be low. But like I said, watch, and I would even guarantee that the Russells could get back up through the 194.30 level. And I'm using IWM quotes, not actual cash quotes.
All right. So
Go ahead.
I've taken a deeper look inside of here and trying to point out to what actually contributed to the rise, right? Shelter index contributed 90% of the rise. Food index up 0.2%. So food and shelter staying up, right? And now if we're going to start worrying about energy, that's where really concerns can come in. But definitely shelter, motor vehicle insurance, education, and recreation increased here. Energy was slightly up. It wasn't a major jump there. So keep your eyes on that. Energy index increased 0.1% here on this reading. And then when we look a little bit deeper, food index is up here. Energy is starting to get the move. Natural gas is actually starting to fall on this report. Natural gas actually jumping in the futures. So next report, what will that show up for natural gas is something to start thinking ahead of. Airline fares came down and used cars decreased. I actually have an image that I wanted to talk about that with, and I'll give a shout out to Reuters, Amanda Cooper, on this, and you can see how used cars prices have really started to come down this year. So that's actually helping CPI. So there's a couple of things that we just got to keep watch. The sticky shelter, of course, not coming down, and then will energy increase on the next reading? Of course, we'll be paying attention now to Jackson Hole. That's going to be August 23rd, if I'm to be correct there. So we'll be paying attention from comments, of course, Jerome Powell at Jackson Hole.
And look how wrong people were about a housing crash, Mitch. I mean,
I was one of those. Don't worry. I was one of those.
And logically, we never thought there could be one, because nobody wants to sell their house who has a mortgage under 4%. Why would they? Which means that there's still a shortage of inventory. And, people who could afford to pay for houses in cash, and rentals, which have also been, as you just mentioned, really high, would also keep anybody who could potentially afford to buy a home more in the home market. And, I'm an old timer, right? And I don't even like to call myself that. But I know that 7 to 7.5% mortgage rates, or 5 to 7%, is pretty much the average. And the generation that grew up with rates under 4% didn't realize that, oh, wow, rates could go up.
Gift. Absolute gift for people that did that. Okay, Mish, this has been a really nice and long segment here. I think you were on for one of our other numbers, and I cut you off, and I got all kinds of flack for that. But we kept you on today. Mish Schneider, Marketgauge, giving us a discount, cool, and collected perspective on the markets. We'll be dialing you up real soon. Thanks again, Mish.
Thanks, Joel. Thanks, Mitch and Dennis. Nice to be here.
Always good. All right. Definitely check out marketgauge.com, team. Let's get back to the markets. And Joel, did we just pop and drop? What are we doing, man?
Yeah. You know what I like to do? I'll give a little trick here. What I like to do on days like this, because it really, I haven't hit a good level on the upside, and I really haven't hit a good level on the downside. So, looking at the 50% retracement on the day is very important. That's 45.09 as we speak. But I also like to see where we were at before the number. And the number, before the number, we were 8.25, right? And we're coming on that area. So if this is the bullish report that, is going to reignite this market, then I see us. But we've been leaking, so far. It's been a trading range, kind of down to the 45.80 level. But Triple D, do we got him back with us here?
I'm back.
Yeah.
We popped and then we dropped. I mean, again, this same story is in this market here, and it's sell the rip. It's 2 weeks of sell the rip. It is working continuously. We ripped on that number because you know what? It's not hot. It's not hot. And you know what, though? And nobody really expected it to be hot. So we are leaking here substantially right now. Yep. Again, I think in this market, you've got to take the profit. If you're a bull, you got to take the profits while you got them, or the market's going to take them for you. We are not in Kansas anymore. We're not in this relentless, we buy the stock and it goes up 10% today and then 10% tomorrow and then 10% the next day. We're just not there anymore. And I think the pattern is very clear. Every time we've had these rallies in the last 2 weeks, they're being met with more sellers. We've now built overhead supply. You have the hopes and dreams traders, just like your NVIDIA yesterday, Mitch. We're talking like, when is this going to break? And I was like, I'm shocked. it's not breaking on an SMCI because these are the two AI stocks.
We were
And you
looking
know
for
what?
it,
That
man.
day, NVIDIA lost $20. So, I mean, it just took that. It takes investors time to think of it. We think of it early. What's our job? It's on pre-market prep is to try to think of these ideas early
Oh
and be
boy,
ahead
we're
of it.
falling. Look out, Loretta.
Well,
We're
that's
gonna
it.
go.
Yeah,
Yeah,
it's a fake out to the upside, it seems like, because at least from the
that's all we've
numbers,
had. That's all we've
it,
had these
a
last.
lot
The
of
last
fake
2
outs.
weeks, it's all been fake outs to the upside.
Pre-market, it goes all the way up and then comes back down in the market. You know what I mean? If we're going straight down in the pre-market, we've gone straight up at the open, right? So it seems like, you know, you got to be careful for that complete like topping in pre-market. And I've been seeing a lot of fake outs also at the gates where traders get caught on 1 minute moves up. And then the next, you look at the 5 minute and it's just a big wick, red bar down. So just be careful with those moves out the gates here. Now I think we need to just kind of take a look to see when do we actually get the correction that we're looking for, right? I think we're definitely in correction mode.
I want to throw something in here of what Mish
What are some
said
levels?
about going away from the levels, but when did this rally in crude take place, right? It took
Exactly. It
place
took late.
later in the month and early this month, so that's not reflected in. I know natty gas has moved up too, so we know the lagging effect of these numbers, but I don't think this is anything that the Fed's not going to flinch off this. This is like, I think they still may go a quarter. I mean, I think they're still staying with the path that they're on, but boy, oh boy, we are losing altitude here. The pre-market low comes at 44.9275. So thought we would hold up here a little bit longer. Dennis, did you see any particular? I mean,
They bought everything, and then they're like, "Uh-oh, the algos were wrong again here, folks." And
these algos.
Same story. Like, we cannot hold gains. We have changed. Sell the rip is working better. Listen to this. Sell the rip is working better right now than buy the dip did all year. Sell the rip is actually working better than buy the dip did all year. I'm not joking. It's like everything that's ripping up is getting sold. Penn, look at Penn yesterday.
Oh, give it
$33. Boom, now it gets downgrade. It's going to give it all back. You know, you talk about, coming down here, maybe get this at 26. You get the
you know my level, Dennis. 26, baby. Come to me, Penn.
I'd wait to
get it.
You're
going to get it down to 24, I think. I'm still long it, in the long-term portfolio, which has been a disaster. But nothing holds. The gains aren't holding. And to Mish's point, there is some value stocks. Oil's holding up well. There is a few things holding.
Energy,
but
baby.
This like AI bubble.
That's why I'm in XOM.
The AI bubble, it isn't about the AI bubble. When is it going to burst? It burst last week. The AI bubble is now burst. Now, I think the AI is real. I think it's going to come back.
Let's talk about that.
I'm telling you, man, we were way overbought on all these stocks. You saw what happened with SMCI. And if you're sitting in an AI stock, you must be like, I don't want to get SMCI. I don't want to get super microcomputer.
No, don't even look at those two. Look at
bucks basically in a day, giving back a month of gains in one day, giving back almost, a third of the move, over a third of the move in one day. And you think like, nah. I'm like, I don't want to own my NVIDIA. And that's why NVIDIA started getting sold. And there's so many other ones. It's why we've been raising cash. I've been doing that for a while. I did buy some stocks, but look what I bought yesterday in the long-term account. Enbridge. Kramer's been tooting its horn, but I've liked Enbridge. I have, multiple, properties where I pay Enbridge every month, a natural gas provider in Canada, biggest one. So 7% dividend. That's defense, folks. That's a defensive stock. It's, a stock that can actually hold on or even trade up if the market starts to get ugly. So Enbridge. I did buy American Airlines, which was an aggressive one. But again, I still think there's something where the consumer might still be doing stuff. That might want the Enbridge I feel pretty good on. The Enbridge I took a big position on. So I feel pretty good on that one, but it's tough, man. It's tough to just keep on the bull train. It's been going for 7 months. What do you guys want? It's been an incredible year.
I know.
Book the gains on the rallies. What is happening is money managers are booking the gains on the rallies because they don't want those gains to go away. There's a little bit of fear out there all of a sudden. And maybe we just go back into this market where we just relentlessly buy everything. But, you see a stock like Upstart, UPST, $71 a week ago. This
2 for 1.
We're squeezing them all. We're going to 100. Well, you know what? When squeezes end, they end quickly. Boom, down 10%. Boom, down 12%. Boom, down 10%. Boom, down like 25% yesterday. Those are consecutive losses, 10, 10. Buy the dip on Upstart, people ruined on that. It's $34. It just gave back over half
33.
of the 2-month incredible 700% gain in a week. That turns people off, man. There is overhead supply here now.
Let's look at the original AI stock, right? C3 AI. That was the first one that actually really started to get it moving because it had the ticker AI. And look at it now in the last 3 to 4 days. Trend
Starting to leak and
broken
looks
here.
like it's ready to fall off a cliff.
It has already fallen off a
It's
cliff.
not
It's just,
absurd to think that this thing could be a $20 stock again. It's not absurd to think that. Now, I think there is going to be some buys in here. You know, part of me thinks even on the super microcomputer, like the PE is not crazy on this one. You know, you look at it, it's like trading like 20 times earnings. It's not crazy. I don't know. Like, again, the earnings, you know, maybe they're fluffed up right now. It's not going to continue. So there is going to be some buys here, but I'm not buying Upstart. I'm not going and buying AI because it has a cool ticker symbol. You want to buy good companies at reasonable valuations. So that's what, get your shopping list ready. Todd Gordon tweeting at me this morning. He's got a shopping list going. I have a shopping list going too. Enbridge was on my shopping list. I had it in my long-term portfolio for a long time. It is now $10 off the high. Jim Cramer, you know, is not always right, not always wrong, but I think he might be right on this one. And he's been
Dividend
really
on this one.
warm.
Nice dividend on this one, right?
It's a nice dividend. And you know what? This isn't like, oh, it's Enbridge, it's 7.29%. It's like, oh, they think they're going to cut the dividend. This is not an AT&T dividend. This is one of your major utility companies, if not the biggest one in Canada.
Yeah,
Enbridge
well,
is huge.
Yeah,
I don't think the dividend's getting cut here. I think you got 7%.
I think you have another worry with Enbridge, and the reason I won't invest in it is because I'm worried about that pipeline under the floor bed in Lake Superior. That thing's old and it needs to be repaired, and they're really not taking care of it. So
You're
I think
worried about that?
Yep. So I think one day, you know, if something happens with that, you're going to wake up and that thing's going to be at like $15, $20.
And you're entitled. I don't think that's going to be the case. I don't think that's even on investors' mind. It's not on my mind right now. Maybe you're right. But,
Okay.
you know,
I'm just pointing it out.
so there's always a risk. So maybe that's the risk. Maybe that's why it's trading at 7% here. But I'm not concerned about that. Joel may be right, but I've been in.
I mean, it's just
how long have we known about that pipeline issue?
Long time.
And I mean, Enbridge is, you know, not really.
It's a big fight here in Michigan, but anyways, I mean, that's something that, you know, you can't predict. Let's do some more earnings reports here because
let's bring it back. I got you.
Yeah,
let's
Baba.
Go.
What about Baba? Let's talk China.
You want to do Baba? All right, let's take a look at Baba's Q1 adjusted EPS at 240s here. Beat the 202 estimate. Sales at 32.29 billion. Beat the 31.2 billion estimate. Alibaba's cloud Q1 revenue at 3.465 billion grew 4% year over year. I've mentioned with Baba, it's just going to be all about the China and what do they want to do on stimulus? Are they actually going to stimulate the economy or not? I think that's what you need to be looking for.
Nice pop off it. You know, it's still that $100 mark. That century mark is still big. And
when the hell does Baba miss earnings?
I don't know.
And again,
depends who
you
does
don't
your
see
numbers.
a lot of these China stocks miss earnings. It's not that they're all cooking the books, but we know the accounting methodologies over there are quite different than they are in North America. So, I mean, if you think Baba was going to miss earnings, Mitch, can you go research that? You know,
I got it right here.
Has Baba ever missed earnings?
Yeah, they missed it 3 times. I have my let me get my StreamYard up here. Let me show
When's the
the
last time they missed earnings.
I'll show you 1 second here. I got it up here. And well, why is it? Oh, I gotta move the screen. Hold on 1 second. All right.
Let me know if you want me to do it.
I got it. Sharing the right screen now.
There we go. We got it.
Yep, they missed 3 times. They missed Q2 in 2021. They were flat, and then they missed in Q4 of 2017, and then they missed big on their first report, but that was the first report. But
there hasn't
it is.
been a lot of misses for Alibaba. There's a history of beating earnings. And maybe it's the company's awesome. Maybe it's whatever else happens over there. But I tell you, you know, this investors, they take it at face value. Probably should have just bought Bob ahead of the report because they were going to beat.
Yeah, revenue. The revenue has been a little bit, a little bit less impressive, but it has been doing okay for the last 3 quarters. And the price action up 415. Also, they eased travel restrictions in China, so that's giving a little extra boost to the FXI and some of the Chinese stocks.
All right, let's move
We're
forward
shopping.
to.
We bounced back here. There's been
I
a lot of
know it's a
opportunities
battle.
here.
It's a battle royale, man. I'm telling you, it's a
I like
battle.
Mish's strategies here. I think you're buying value on dips. I feel like Enbridge is value. I feel like there's other stocks. I bought some lithium. I feel like there's some value in the lithium companies. I don't think that story's going away. I mean, look at the LTHM pullback. This went from 29 back to, and gave it all back.
My
I'm like,
problem
we're
with
back here
these,
at
Dennis.
support.
Then my problem with these is just look at EVs. They usually run with Tesla runs, and I've seen this on the chart countless times. Tesla's on the downside action, lithium names on the downside action.
But these things are trading 9, 10, 11 times earnings.
No, you're completely right on the valuation outlook, but I don't think now is the time just because of story.
I feel like now is the time because they just pulled back to support. I mean, the ALB was a blowout quarter. I'm long it already, but holy, 250 down to 195. I feel like you're getting a shot back here at 180. I don't think the lithium story is going away. So I'm not talking trading here. Take the trading hat, throw it away on this conversation.
Yeah, we're talking more
I'm
investing.
talking long-term investments. I didn't buy lithium in my trading account. I didn't buy ALB in my trading account. I put them both in the long-term investing account because I feel like there's good value here. And are we going to be talking about lithium 5 years from now? Do you think? Do you think there might be an
100%.
outside chance that we might be talking about lithium 5 years from now? I kind of think so. So I think you're getting these at ridiculously reasonable valuations.
I can't blame you for that outlook. Definitely long term, I'm still all for lithium, but just gotta. It's all about timing.
Yeah, you
right,
may
with
get it
long-term
cheaper. Maybe
investing.
it gets down to the 20. But the thing
it's
was
timing.
at $29 2 weeks ago. So you just had a 20% haircut. What I was talking about with the investing hat, buying good companies at reasonable valuations on this pullback. Enbridge, lithium, both fit that bill. Not buying upstart. I don't buy zombie companies that are all, fairy tales and, caviar dreams here. No, we're talking about real companies that are actually making real dollars. So that's what my portfolio is full of. PXD, I took a lot of heat on that one. It's working out pretty well here right now. So buying good companies at reasonable valuations, that's how you do it in the long run. That's how Warren Buffett has been the best investor
That's how I do it.
his 93 years of life. That's how you do it.
Did you see? Oh, just interesting that you bring that up. Look at that. When $360 stock, you got. I wonder if that's Warren himself selling out there at 364 and change. Look at that. 3 highs in a row. 64, 63, 64 and a quarter, and 64.43. So man, you got better take that. I think you have to find a way to get above that level. Doing really well after earnings, right? Over the weekend. But a nice formation, all-time closing high for Warren. That's what I'd be keeping an eye on today. And that was the close on Tuesday, 63.73.
All right, let's move towards one that I always thought I was like, there's no reason for this to run. Guys, come on. Fuel cells way behind. Plug Power. Q2 EPS at a loss of 40 cents, misses the loss of 26-cent estimate. Sales of 260.18 million, beat the 242.24 million estimate. They reaffirmed fiscal 23 revenue. But like I said, guys, every time this stock pops, it comes right back down.
Has Plug Power ever made money?
No, I don't think they have.
Have they
I highly
ever?
doubt it.
Joel, go to your Benzinga Pro and do that
Let's do
history
it.
thing again. Has
Okay.
Plug Power ever made money? Any quarter, like even a penny? Have they made money ever?
No,
Here
I
we
can
go.
tell you that right now. No.
Here we go.
Why in the hell am I investing in something that's been around for 20 years and still has never made any money?
Got you, Joe.
Why am I investing in that? I'll trade it. It's a story, sometimes it's a story, but why invest in this? No, look back 22. Let's go back to like 2013. Looks like there's a positive one there. Is that right? Was there 22 cents a pause? No, maybe not.
No, man.
They've
There's
never
no-
made money. How many years has this company existed? We were talking about this in
since
the tech bubble
2012.
burst.
Since
No,
2012.
further. I
Further?
guarantee it's further.
Let me
I
see
bet
on
you
the monthly on my rate. Oh
Let's
yeah, I
see.
have it going back to like 99, 2000.
It's been around.
I don't have the earnings
1999.
there.
In 25 years of existence, this company has never figured out how to make
You guys got to see
$1.
this chart.
If
This
they
chart
can't
is
figure it out in
ridiculous.
25 years, why am I putting my real money into this money burning machine? No,
Holy
thank
crap, man. Yeah, I'm sorry, man. I just there's just no point. Like there's so many other stocks to look at here. I don't even know how you look at this stock with that chart to the
No,
left.
like why? If you were L and the E and you think the fuel cell is going to be the future, I tell you, I'm pretty confident lithium is going to be involved in most of these EVs going forward. You have
Yeah,
these
and
lithium
lithium's gonna
makers
come
paying 11,
first.
12, 10 times earnings.
One thing that I've stated this, and I've stated this multiple times, fuel cell is still more expensive than diesel. Why on earth are we going to switch to it if it's more expensive than diesel? It just doesn't make any sense there, right? Lithium at least makes sense in the future. Fuel cell still doesn't. It is going to be in the long run. I think they'll get it to cheaper than diesel, but right now it's not. All right, let's keep going. Let's get out of Plug Powers. Let's go to the casinos. Let's go to Wynn's Resorts as they got Q2 adjusted EPS at 91 cents, beats the 59-cent estimate. Sales of 1.6 billion beat the 1.54 billion estimate. They did say that Q2 results reflect continued strength in North America and Macau. And we've been seeing travel restrictions loosen in China. Will Wynn bounce back here?
Maybe. I'm torn on this one. I would throw it into the value camp. It's just run so far from where it was in October, back in $60, $70. I mean, in long run, this has been just a terrible investment too. I mean, they just haven't figured it out. You can look, we're $200 back in 2018, but I think we were even higher than that if we go further back.
Yeah, we were over 240, and then
When was that, Joel?
That was in
2014.
yeah.
You
And
had a
then
decade of lost money here. I'm kind of torn. People still doing stuff. I think the casinos, I could get talked into it, but I'm too much on the fence to make a decision on it.
It got wind in 2018. Remember that? That whole thing with the sexual harassment.
Yeah,
And then
Steve Wynn.
go down to the COVID low. Boy, I tell you, it's tight, and it's been tight for several months here. 117 is a triple top on the monthlies. That's not going to do you any good today. And then there's just real good support. I'll call it 97. That splits, so that's been the bottom of the trading range. I think what and I don't follow him, and I don't know how much he's done, but who's that guy that owns the Tillman Fertitta? He owns the Rockets. He is the one that got this thing
Tillman
jump start.
Fertitta, I think his name
Fertitta.
is.
When he saw, if I owned it, yeah, he did this in the middle of last year. He loaded up on this. So when Tillman, if I was in it, I would try and find his holdings or his Twitter feed. He bought it good. If he sells it, I'd sell it. But right now, just in a trading range and kind of the lower end of the trading range. S&P's bouncing right back here. It's going to be a battle of the bulls and the bears today. It's that little dip under 4,500 was bought. So don't know if PPI is going to shake things up that much tomorrow. But man, let's do more. Let's do App Lovin', because that's a stock that Michael Pachter's pounded the table on, and boy, that's having a huge move.
All right, I was not paying attention to App Lovin', but Joe caught me by surprise here. Let's take a look here, because I don't think I look at App Lovin' at all. But all right, Q2 EPS here, 22 cents, beats the 7-cent estimate. Sales of 750.16 million, beats the 724.27 million. And then you look at Q2 revenue outlook. Not looking too bad here. Pretty good outlook here. 780 million on the low end, 800 million on the high end versus a 741.41 million estimate. So definitely getting a lift higher. And I love the headlines out there, even by Benzinga. Swooshing higher on AI-driven earnings beats.
Swoosh is higher. Who wrote that one?
I don't know, man. But I even got to call us out when we do shit like that. Come on, man.
I like the swoosh is higher. I never heard that before. Swoosh is higher. It would be good for Nike. What? Save that one for
AppLovin,
Nike
baby.
next time, guys. Nike earnings. I want to see
Yeah,
Nike
swooshes
higher or
higher. Yeah,
swooshes
come
Hope the
on.
lower.
news desk isn't.
I'll
News
talk to them.
desk. Save that one for Nike next time.
Snooze desk. 4056.
No, they're not. No, don't say. They're awesome. Our
40.
desk is really good. The news desk is really good. We've got some great guys on there rocking it out here all the time. They don't pick on them for the swoosh thing. They're
Okay.
solid.
I wasn't. You guys did. 4056 was your August high in 2022. Right now, someone has a little bit of a opinion at $38. That's been the high of the pre-market session. So, folks, I'm gonna leave you now. There'll be no pre-market prep plus today or tomorrow, or no closing print for those 2 days either. Keep an eye on the outer ranges I gave you, the three highs in the S&Ps at 45.40 area. That's just that bulls need to bust us through there. And for right now, on the downside, if you want to keep a uber bullish tone, you can say, hey, we made a double bottom at the 44.80 area, and that's just going to propel us right back up to the 4,600 area. So great show today, a lot of fun, and I'll be back with you guys. Well, tomorrow morning, I'll be there for the PPI. Go get them, everybody.
All right, we'll see what happens there. And I did see on AppLovin's report there, I was taking a look to see if they actually gave me AI revenue. No. Show me the money. I'll say it once more. It's all talk. I'll show you it. They're saying
Nick Brown has confirmed, our own Nick Brown has confirmed that on the Disney call, AI was not said once.
not a good thing.
AI,
there.
I think Disney could be an AI play. They need me to run Disney. If they fire Iger and hire me to run Disney, I think I could turn this whole thing around. One, I'd be putting new content on that Disney Plus. Two, I'd be talking about AI on the conference call. I would not say it 0 times. I would say it a lot of times, because you know what? We're going to bring the AI experience to your room through Disney Plus. You don't have to even go to the park if you don't want to go to the park. We're bringing it right to you right now. You want to ride that roller coaster? Let's ride it right here in your room. That sounds exciting. Come on, Iger. Hire me. I'll turn this company around.
Right? Just team up with Apple for their Vision Pro. Give me every ride on Disney on the Vision Pro.
It'd be fun,
Ooh.
man. I guess maybe they
Ooh.
think it's going to cannibalize their own park sales, so there's that issue, I guess. But well, yeah, you can ride all the rides for like $30 from your. And now nobody goes to the parks. It's like, Dennis, that was not a good idea.
Well,
right.
we'll see what happens with Disney today, of course, and we'll be watching, of course, mainly. I'm going to be watching stocks, of course, like the tech names. We'll see what happens if we start getting some bounce today. Are we still leaking here? Let me see. Getting a little bit of a bounce there. Now we're back up to 449, so seems like it's going to be a mixed day. At least I feel like. I think you might see up and down action,
This is
but we'll see what happens.
Day. Yep, I'm with you, Mitch. I think it's going to be a choppy day. I think we're going to continue to have a choppy month. I mean, we're getting out of the major earnings season. I know it was like 2,000 companies that reported this week, but 1,800 of people really hadn't even heard of. So there wasn't a lot of huge names out there. And as we continue here, I think you're going to get into a little bit more of a quiet period in the back half of August. We've now got the CPI behind us here. What's the major earnings docket next week? Have you looked yet? Have you looked ahead?
Next week, there's not much. It's going to be the following week with NVIDIA. That's what I
week?
see.
Is there anything cool next week? I got to go look. Is there anything cool next week?
Yeah, I'll take a look.
I typically look on Thursday into the next week. And then, and then I start positioning myself because, I like to own their companies ahead of the reports, although that strategy hasn't been working that well because too many dang companies getting hit on their earnings. So not a lot of companies reporting next week. I'm looking Mondays like Crickets, Tuesday, Home Depot. It started retail earnings season. JD.com is there. Wednesday, Cisco, Target,
AMAT,
Wolf.
Cisco, yeah, Cisco's an interesting one. Definitely.
Thursday's Walmart.
Walmart's been doing really well. It had a 52-week high, I feel, yesterday.
Just went ex-dividend too, I think, last night. Applied Materials. Friday's Deere. Oh, Deere. And PANW.
Deere's been doing well.
PANW.
Well, that's another area to maybe look at today, right? If we're looking for lower PE names. I've been watching the XLI. It's starting to get a bounce already. I like names like even Boeing. Boeing has been getting hot as of late. What do you think about Boeing's chart lately? It's been pretty strong.
You mean I bought a American Airlines, so it's kind of like going Boeing, same type
Yeah.
of thing. So I believe people are still going to be doing stuff. I think they're going to find money to go on trips. I don't think that part of the economy is going to go into recession, which is why I have bought the recent pullback on the airlines. So far, not so good. You know, you had that nice day, and then you kind of key reversaled it almost yesterday. So not that great. But I feel like this pullback in the airlines is a buying opportunity. May be wrong. Again, I'm confident. I'm playing a little more defense there. I've raised cash. Buying a heavy position in stock like Enbridge means I'm kind of positioned defensively. But I can see, I can see if we pull back a little bit more, starting to get a little bit more aggressive on some of these. Like, I mean, I talked about buying Square yesterday. I think, I don't know if you're going to get down to 55 or 60, but I mean, just gave it the whole thing back in 4 days.
Yeah.
It feels like a natural spot for it to bounce.
I mean, oof, you hear the storm that I have? This is no joke. But one thing is always to keep in mind, right? And I think that this is important. Also, we talk about this all the time, Dennis, that the market loves to hurt where it can hurt the most. We're starting to get that pessimism going in. You're starting to see a lot of people starting to buy puts. This could be the day that maybe we get a little bit of a bounce also, right?
Maybe.
And so just keep that in mind, right? Things don't just go straight in one way. Very rare do we see stocks go like we saw recently where they were just going straight up, right? And so be careful out there that we could see a little bit of a chop as you start to get some pessimism into the market. Even I'm a part of that, but at the same time, I'm also understanding that the psychology is shifting from extreme bullish to now starting to maybe get a little bit leaning on that bearish side. So that's when the market usually has a tendency of just telling us, hey, watch out. We don't go one way. We'll find out today what happens there.
So again, chasing worked for a lot of the first half here, but historically speaking, chasing doesn't work. Buying, the dips on uptrends works better. Some of these trends are breaking is the problem. So like now you need stabilization. Long-term, trends may be still intact with a lot of these things. Do we eventually come back into Microsoft and Apple? Probably. I don't think these stories are gone, but again, valuations were just too stretched. Do they eventually buy an SMCI? I think so. I think the story will get hot again, but you want to buy it on day one or you want to wait for the dust to settle? It often, is a better thing to maybe wait for the dust to settle, but pick your spots. I mean, good companies, reasonable valuations. SMCI isn't one of those zombie money burning machines. They're actually PE is reasonable here. So it's, on a pullback here, I think you are buying this maybe 50%, 100 to 350, you get that 225 to 250 area. Maybe you take a shot.
And I think one thing to keep in mind is that stocks have a tendency of when they bounce back and they get these elevator moves down, it starts opening up volatility where the stock can make big ranges, right? Because the ATR is now super expanded. And so you can get these quick little bounce backs and the shorts get trapped really quickly. So I've been seeing a lot of that with like kind of stocks like NVIDIA too. They'll make this really hard down move, but then just come right back up. And so be careful out there, traders. We'll see what happens. Like always, Dennis has been talking about right now, it's more catch stocks that are ripping up that come back down, not necessarily just chase the names lower, right? Because that can easily be a way to get caught on the short side. We'll see what happens. Like always, keep up with Dennis Dick on Triple D Trader on Twitter. You guys will see him definitely make some mentions today. I'm sure it'll be a fun day. And it's always good to have you, Dennis Dick.
I think it's going to be choppy.
Yeah, a little bit of up, down, up, down, up, down. We'll play with it. We'll see what happens. And I think that's what we're in for the next 2 months. You've talked about this, Dennis. We'll see if we get through this kind of lull in the market. That's going to do it for us on Pre-Market Prep. Thank you, Dennis. Dennis is out of here, guys. We're going to bring you guys over to live trading. That's coming up next. Don't go anywhere. And later today, we have a great webinar for you guys, the Benzinga EV webinar, Driving the Future. You'll have different companies there that you guys might just want to take a look into. We have some battery plays. We have some EV plays. And of course, stay tuned. There's some charging stations even included in this. That's going to be a part of our webinar, Driving the Future with Electric Vehicles. So if you guys don't want to miss that, as Benzinga highlights the companies and leaders in technology paving the way forward in the automotive industry. That's going to be at 11 a.m. Eastern, right after live trading. So let's go over to live trading. Let's go make some money. At least that's what I'm going to try to do. We'll see what happens. Catch me on live trading. Catch Lord Ryan and, of course, Nick Brown to cover the news. We'll see you over there. Don't go anywhere, team. Stay right here, and let's keep getting into some trading action.
Bye.